talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Tuesday. Let's get started. So SPX is up a little bit. We've got some directional pushing here, about 30 points to the upside, coming back to fill this gap from Friday's close or close to it. It's going to make for an interesting move since we started the week off on a rough note, just like we did last week. So here was our, open last week. Let me change the color. So open last week, pushed up all week, and then tariff talk on Friday ended on a sour note. Still finished the week red. This week started off again on a rough note, working our way back up to fill the gap. Question now is, we have a high, lower high. How much effort do the bulls have to put in here? If the bulls can pull back and fill this gap, is that enough to say that the bears are then going to take back control, or is this going to pull all the way back up to hit the same tops again? I don't know. We have some earnings this morning that I want to take a look at. So I had a winner on Palantir. That was more than expected, which is perfect. So Palantir up to 105. This stock cannot be stopped. My ratio spreads is looking good for full profit, which is totally fine by me for April and May. I need a price to be above 91 or below 69. It's well above 91. And I closed out for max profit was $2. I closed out for $1.75. Now I could wait until Friday to grab that extra 25 cents. To me, I thought it's not worth it. So I took the return. It was about a 70% return on risk, which I'm totally happy with. So good stuff for Palantir. We had some other earnings that popped in overnight, which includes the following. We had PayPal overnight. We had Spotify overnight. PayPal is at 81. Let me check and see something here on PayPal. So PayPal. So it's trading around break even right now. That's fine. I'm going to see if we go a little bit lower. I need price to get below 80 bucks. Let me see if it will. So I'll put a chart alarm here. $80 if there's a push lower. Okay, we had Spotify. Spotify is now above $600, which would have been I didn't get filled on the trade. I was trying to get in for what I thought was a fair price, and I went like even 5 to 10 cents higher than the mid price that I was willing to expect, and I still didn't get the trade filled. So unfortunately, my earnings play on Spotify didn't get taken the way that I wanted, but price did go to the expected move. So I was looking for about a $50 move, and we ended up going about $54. So that's pretty good, enough to make it, make money on the directional move. The problem was I didn't get filled at the price that I wanted, so I opted out of this one. Pfizer. What does Pfizer have to do to stop looking like it sucks? So it's sitting here at COVID levels. It's sitting here in 2016 levels. We've got a nice solid level at 2024 lows. I don't know, man. Like Pfizer, get with the program. Start making Ozempic, for crying out loud. Eli Lilly's doing it. They can't be stopped. Speaking of, Eli Lilly has earnings on Thursday, but Pfizer earnings, they beat top and bottom, and price is like, good for you guys. We don't care. So I'm still waiting. I'm hanging out. We'll see what happens. But that's Pfizer. What else? Pepsi. I'm just curious on Coke. Coke is at 63. I've got a covered call at 65. Speaking of Coca-Cola, let me check my covered calls on this one. Shares. Okay, I'm going to put another covered call in on my Coca-Cola trades. Double check my break evens. Coca-Cola, I own at 63.66. I'm looking at a repair trade. Let's go out like 30 to 45 days. Let me see if there's earnings on Coca-Cola. Earnings next week on the 11th. Okay, so I can maybe try to I'll try the 65 again. So if I go out, let's say 45 days to March, I get 84 cents. That's not bad. That's not bad at all. My break even is 63. Okay, 84 cents. That lowers my cost basis down to 63.66 minus 84 cents. Now I get it called away at 65. I make 218. That's a nice little repair on Coca-Cola. I'm cool with that. Okay, I'll do that. Actually, what I might do is put in a collar trade. Maybe. If I'm going to do a collar trade, I'm going to go out a little bit farther. So let me go, instead of March, let's go to April. That's 72 days out. Now I get more. I get $1 for the upside. It's a 19 delta. If we have any price appreciation, lower the cost basis by $1. And I don't know why the puts are showing that type of price. That's really odd. The put price, I've got a 57.50 that only cost me 52 cents. All right, this is going to be interesting how it fills. So if I had a sell call at 55 and a buy put at 57.50, that gives me upside and downside protection. That way, if the earnings come out negative, I can increase this put side from a 52 cent debit to maybe a 75 to $1 credit, so I can take some profit, lower the cost base a little bit more. Trying to think, and then I can look at rolling a little bit. But it's crazy, like the put side asks are way different, which I think is I don't know, it looks like the pricing is a little bit off. And then I have 0 bid prices on the put side, which is, if you want to sell covered calls on, or sell puts on Coke, you're not going to get any really premium for that. So is it worth that trade? I think it's worth having the protection just in case the thing drops lower. Dropping down to 57.50 would be a big move for Coca-Cola. This thing barely moves to the downside, but I could see us like jumping quickly on earnings down to $60 if that's enough of like a delta gamma move to get me some profit. Otherwise, let me see here. What's fair value on Coca-Cola? Okay. I mean, I'm not really looking to hang on to this longer term, but I'd like to see the stock go higher. 65 would be fine. Get it called away. I could see us getting back into the higher 60s. $66 to $67 is pretty fair, just based on the volatility. I don't know if we're going to get there. So anyway, let me see this. I'm going to go. I've got some exposure on this one. How many accounts have Coca-Cola? I think I have 5 or 6 accounts. 1, 2, 3, 4, 5, 6 accounts that have shares. Okay. 100 shares. If I put in the 65 by 57.50, see if I can get 70 cents credit out of that collar trade. See if I get 65 cents. That still lowers the cost basis. 65 is not filling. Come on. 60 cents. You son of a gun. 59? 59 cents. Okay. So that just got filled. I'm going to try to get all the accounts filled at 59 cents. That way we've got it protected as well as a covered call. So this is a 4/17 expiration collar. I have a 65 sell call. I have a 57.50 buy put. And let me see what that price just got filled at. So 59 cents credit. And the updated break even is 63.66 minus 59 cents, 63.07. Okay, 63.07 is the ownership price. Okay, Coca-Cola here, April 17, 65 by 57.50 for 59 cents. Come on, man. Jeez. I'm not taking less than hopefully 55 cents for any of these collar trades. 57 not filling, 56. You've got to be freaking kidding me. $0.54. Jeez, oh Pete's, man, that's awful. All right. Anyway, let me focus on getting these filled really quickly. 65 by 57.50 for 54 cents. $0.53. Okay, shares here. 65 by 57.50. 53 cents. Filled at 55. That's good. 65 by 57.50. Try to get 59 cents here. Try 55. Filled at 56. Okay, good. This account doesn't have any shares. No shares here. That account has some shares. Okay, 65 by 57.50. 56 cents perhaps. $55. Come on. 54. 54. Okay, this should be about everybody that I need. No fill is there. No fill there. No fill there. All right, let me double check. I now have positions on Coca-Cola. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Okay, so I have all of my shares. I have all of my long puts and all of my covered calls. So this is a collar trade right here. So my 57 long put, the 57 long put with the 65 sell call, that's a collar trade. So what that means is price is trading at 62.83. So if this is priced at 62.83, okay, if price goes down, I can hopefully see, I've got a lot of these filled at like 46 to 48 cents. If price goes down, I'm going to try to turn my 57.50 put into a greater credit. That helped me lower the cost basis. If price goes up and it's greater than 65, if it's 65 or greater, then I get it called away for profit. My break even is now 63.07. I got filled for a little bit less, so like fits 63.07 to like 63.10. Okay, and then the debit side of the 57.50 put, that debit was at most 49 cents. All right, that way I've got a reference point. Okay, so I want to get that taken care of. I took a trade late yesterday on Intel. I was going to add that into Pulver alerts. So Intel is trading at $19.40 is exactly where I bought it yesterday. So that's not too bad. I'm going to add this into the stock options new trade section for my Pulver alerts, new trade, Intel. I did a $1,000 allocation at 19.40. And that was around 50 shares or so. So $1,000 divided by 19.40, I bought 51 shares. And then I have a pending 1250 allocation at $13.50. That's around 92 shares. So a 1250 allocation out of the 1350 price point, 92 shares. Limit buy on 92 shares. Intel sitting at strong support. I'd say near to medium term target at $26 to $28. So if we take a look at the price here on INTC, we're trading at 1940. There's my notes. $22 chart alarm, back to this high at 26. This is the window that I'm watching. So if price comes back into this pocket right here, I'm going to mark this one in green. That to me is good enough. So I'm going to say, short term or near term profit target. That's it. Even if we have a squeeze, that's all I'm going after. Okay. So that is in. I'll put in a screenshot, post this. It's the nice thing is it's the exact same price that I got filled at yesterday. So that's going in here. Intel, I think they have earnings. They already had earnings. They had earnings January 30th. Price didn't move a whole lot, but screenshot's good. Okay. So that's getting posted, and final piece right here. Okay, Intel's posted. What else? Let's take a look top down. So markets are up a little bit today. As we discussed, expecting some volatility. Look, I think this market is going to struggle to make momentum breakouts to the upside. I think if we get breakouts, I think they're going to be fake outs. So don't be surprised to see the market, find a high and then come back down. I think there's enough resiliency that this might be just a very choppy area. I still think that our moving averages and whatnot catch up and we can find this bar count. The thing that make me a little bit more nervous, like right now, getting back to this 200 moving average is a great spot for a dip to buy. I think my concern would be this. If we end up going sideways where we don't really have much of any direction and these moving averages just catch up, right? They're just moving here and then a price, spikes down and then spikes up. I could see that type of volatility this year. I mean, you can see over 2 weekends from DeepSeek to now tariffs, you can see how sensitive this market gets over the weekends if there's a dramatic news, from a Friday to a Monday, right? So this is why a lot of my trades are big margins for error, still generating some income, trying to stay out of the way. But here we go. Looking at this. Rise as mega caps charge ahead. What about that Mag 7? Does everybody love? Oh, it's pretty much everything about them. So what's leading the way today? Take a look at your heat map. Oh, I don't know. NVIDIA up 3%, right? Back up to 120. Google's up, Amazon's up, Apple's up, Tesla's up, Microsoft is up. Advanced decline line's probably not all green. So right now we have showing 68% of stocks advancing. That's I'd say relatively green. But when it's led by big stocks like your top 10, it's just no different than what we've been dealing with. A lot of concentration at the top, lots of flows, safety, quality. I think that's the hard part about everyone hating on the Mag 7. It's like, what's not to like? I mean, I get it that the market's concentrated, but all I want to do is just buy at better prices, accumulate more at better prices, But anyway, I mean, we've had some interesting Mag 7, right? Apple, post earnings, I mean, Apple dropped hard by about 8%. And the index is down a couple percent. So I'm telling you, like, stocks are going to be way more volatile than indexes this year, which is why I'm doing a lot of index trading. But we seem to put a bit of a hold on right at that 200 moving average. I've got my ratio spreads down a little bit lower for March and April. Here is Amazon sitting at all-time highs once again with earnings coming out this week. Earnings should be Thursday. Google also sitting all-time highs with earnings coming out today after market. Meta just off of all-time highs. I grabbed a little profit on that earnings play last week. Microsoft, I have a bunch of trades on Microsoft February. This is in a couple weeks, March, and April. I think this is a pretty strong level. Now, if I want to get a little bit more, I don't know if I'm going to get a great trade here, but if I went like a 410, let me see what this trade's for. This is a bit more aggressive, but I'm curious. Microsoft this week, 410 by 407. Let me see what I can get here. So would we come back to the lows 408? 407 by 402. I mean, you're clearly taking on a little bit more risk. I mean, it's an income play, but do I love it? Not really. I could do this though. Let me see if I can turn this into like a broken wing butterfly. Let me go put fly. If I do a broken wing here, if I pin this thing at 405, that's a little bit better. A 407 pin price. This actually might be a decent trade for this week. 407. So Microsoft would have to come back and have a bad week. Now it's possible that we get below this low, right? But if I have a 407 or a 405, what's my max risk here? 25 cents credit. Am I willing to take on a bit more risk here? So if I'm willing to, I mean, that's just not worth it. Taking on $1,000 to make $40, it's not worth it. I would rather tighten this up and see if I can get 30 cents on this trade. 30 cents, 405. That's a pin price with a $277 profit trap. That's by Friday end of day. See if I get 25 to 30 cents in the trade, I think I'll take it. Let me see if I can get this trade here. So 30 cents not filling. Let me try to penny this thing down. 29. 25 would be my least accepted price. 28. 27. 27 cents. Okay, I just got filled in that trade. So here's the trade. I'm going to put this in Pulver alerts, new trade, Microsoft. I'm doing a 2/7 expiration. So I'm buying the 407.50 put. I'm selling the 405 put. And I'm buying the 397.50 put. And that's 27 cents credits. So this is a broken wing butterfly. Pin price below this week's low. Looking to see if one, price stays greater than 405 this week for credit plus profit trap. And two, keep the small credit. So the profit trap is a bonus for end of week management. Okay, so I'm going to build this trade out just to show you what it looks like. So Microsoft, let's go here, MSFT, putting in the spread. So the Feb 7 is fine. I'm going to sell the middle for 2 contracts. So I'm buying the 407. I'm selling the 405, and I'm buying the 397.50. So it's a 1-2-1 for a broken wing butterfly. These are all puts. And that's the trade. Okay, so what that does for me is if price stays right here, I make my 27 cents and I walk away with 27 cents. If price goes up, I keep my 27 cents. If price goes down, keep my 27 cents. If price goes down to getting into this, this price right here would be 407.50. So there's 407.50. So my sweet spot on this trade is by Friday, if price is in between 405 and 407.50, I get that actual value of the trade. So there's a 250 sweet spot in here, and the perfect trade, which is very rare to do, but it's hard. If price is at 405 by end of day Friday, I get this as an extra $2.50 plus the 27 cents that I took on the trade. So my max profit is 277, and that's my profit trap. Now there's risk on the trade too. I risk about 400 bucks, 450 bucks. That's my max risk. Okay, but the nice thing is based on the current option chain, 405 is at the bottom end of the expected move. So right now the expected move is to be about 407.50 right in here. And if there's any upside, then it's not really something I'm going to have to worry about. But I'm looking to see if I can get a little bit of a profit trap. So let me see if I can grab this screenshot. This will be what I post for my alert. That's the trade that I just took. And right now that was weird. There we go. Okay, so that trade I'm getting posted for Pulver alerts. There we go. Okay, so that's the trade. It's a harmonic pattern. No, it's not. That is just a risk graph. It has nothing to do with harmonics. It's how the trade is constructed. So what this gives me is if price, so let's say this is real price at 413. Okay, if price comes down, I don't want price to go lower than 405. So I need to set a chart alarm here. And let's see if price hits 405, that's going to be my broken wing pin. Broken wing pin price. And, you know, realistically, it's like if the trade just goes up, if this just goes up, then I'll make my 27 cents per contract, and that's fine. If price is below 407.50, but not below 405, then that's my profit trap by Friday. The hardest part about this trade is that this all boils down to, like, if I want to make the perfect trade, which is here's current price has to fall, then I have my profit trap, then I have my risk. So here's my 27 cents. There's my $2.50. In order for me to get this max profit, I've got to have price exactly at 405 by end of day Friday. That is very, very, very difficult to do. But it's there in case I get myself some padding, right? So if price goes up, cool, easy. Price goes sideways, fine. Price goes down a little bit, fine. Price goes down a lot, then I take on my risk, but that risk is defined. Okay. All right. Netflix up a little bit. I still have a broken wing butterfly on Netflix out a little bit farther. I'm not sure how far I went out in this one. Let me double check that. So Netflix, end of the month. Okay. We'll see. Chart alarm, I'm going to set that one at 1040. 1040 is my pin price. So again, if it does hit 1040, that's fine. Hopefully it doesn't. I'd like to see a bit of a gap fill here, where if you know we end up filling the gap, having a bit of a, you know, congratulations Netflix, you hit $1,000, but you're not going to go too much higher than that. That's the trade that I put on. All right, Nvidia 119. I still think Nvidia, we have earnings coming out late February. I think Nvidia is going to be a gap filler. So February 26th, I'm looking at this to be a gap filler. Probably volatile, but you know, it is what it is. I still like Nvidia from the technical side. You know, fundamentally, it's obviously in jeopardy of, like, oh my gosh, is DeepSeek going to dethrone Nvidia? Well, the argument is that if it takes less Nvidia chips, or it's going to force Nvidia to maybe lower the price of their chips, it just means that there's going to be more buyers of those chips. So I don't think Nvidia is just over. Obviously, I've got some protection. I have a collar trade, so that's why I wanted to make sure that I'm protecting my shares. So Nvidia is, there's my shares. I have a, what is it here? 135 by 115. So it shows right now that my 115 put is up 500 bucks. Let me see what that price was on that. I might end up taking profit on that put and then reestablishing this trade. Maybe. Let me see. So NVIDIA. Okay, so I've got all the puts there. That's fine. Bull call spread. That's fine. Income. That's fine. I'm looking for my ownership here. Earnings. That's fine. Ratio spread. That is also fine. Okay, here we go. So my break even is 127.95. I've got the April, so the 135 by 100. There we go. So I changed a little bit of the mechanics of the collar trade. Okay, that's fine. I don't need to do anything here. So I've got a 135 call and a 100 put. So that's a long put and a sell call, and I'm just gonna let those marinate. That gets me through earnings. You know, ideally it's like I put on some cash secured puts this week with yesterday's open, and I did like a $70 and $75 cash secured put, collected like over $8 a premium, and I'm happy with that. Like the odds of getting assigned are slim. Obviously anything can happen, but if I take ownership of Nvidia at 70 some dollars, I'm okay with that in theory. I don't necessarily want it to be a stock that goes down 90%, but you never know. So anyway, that's my collar trade that I have Nvidia, so no need to adjust that right now. What else do we have here? Tesla. I still can't get filled at 362, but I'm pretty sure I'm going to coming soon. Berkshire Hathaway looking good for that ratio spread. Bonds, yields, 10-year yield still chop suey, but not going higher. So that's at least a promising sign right now. TLT gapping a little bit lower. Mortgage rates are still about the same, just above 7 now, 6.95. Futures market, we're going a little bit higher in some of these commodity-based ETFs. Credit spreads had a big gap lower on Monday, probably relatively safe for right now. China, ooh, what's up, China? Hang Seng is up. Alibaba is up. Bought shares at 99, 85, 55. That's got to be looking pretty good for Alibaba. So Alibaba is currently up around $4,000. Yay, there it is. Not bad. Not bad at all. Okay, and the nice thing about Alibaba is it's uncovered. So if it runs, it runs. Let's get a little bit more excited about this stock. If it runs, I'd love to see some Alibaba back up towards 118. Obviously, I've measured a symmetry swing up to 130. So trying to let this run without covering too aggressively. I did a roll on Baidu. I think I rolled this up to like 100 or something. Let me check. Baidu. I rolled it up to 100. So I've got another $6.30 of upside on the shares that I own, and I'm okay with that. I've got a collar trade on Baidu, so I'm protected the downside. A lot of these out to April as well. Good with that. Okay, so China's looking a little better. JD at 42. This one might be getting called away. I didn't really do a lot of adjustments here, but JD shares that I own, covered at 39 out to the end of February. This one, I'm just going to let this one go. So let me go to jd.com. So there's my shares. There's my covered call. There's my put out to the end of the month. Current break even on JD. Let me check that here. Break even is $35.92. So if I get it called away at 39, I make $3 on 500 shares. So 1540, and that's on a few accounts. So that one's okay. Let me see for a moment. If I went out a little bit farther, I think we have some earnings on this stock as well. We have earnings. Is it worth going through earnings? Possibly, maybe, kind of. Let me see if I can roll this. So if I were to roll this for a week, the week of earnings, keep the strike prices the same, I get an extra 95 cents to $1. Now, to me, that extra dollar is another $500 of profit. I don't think it's a bad trade at all. I think, in fact, I mean, I don't know if I can roll this up, which I can. I can roll this up to 40, which gives me another dollar plus the extra 25 or 26 cents, 20, I guess 20 cents. Or do I just keep it here and take the higher premium? Let's see. I don't mind this actually. Choices. I do have to go here in a few minutes, so let me make a game time decision on JD. I will probably end up, if I don't do anything, I still make good profit. If I roll it out by another week, which takes in earnings, so there is that risk of like, what if JD delivers on earnings and it's terrible? Well, then I'm taking on that risk. But if we have positive earnings, then I'll be glad that I rolled it, went out the extra week, grabbed the extra, 80 cents to 90 cents credit, offering more upside on the net position. So I think, earnings wise, like this thing has been positive. I think I'm going to roll it. Okay. I'm going to make that decision on JD. I'll get that rolled out today. So JD, roll, and then earnings. And I'll either roll it right through the week of earnings, or I might even go out to the monthly expiration in March and give it more time and probably pull in another maybe $1.50 to $2 premium. So I'll make that adjustment. But that is going to be the plan. Let me just fiddle around with, if I went out one more week or I go to the expiration that's monthly. Well, that's funny. Now it's down to 60 cents credit. If I go out to the monthlies, okay, this is probably what I'll do. I'll keep the 39 by 30. I'm going to go out a little bit farther on the 21st of March. That gives me an extra $1. I'm going to go ahead and roll this now for $1 credit. See if I can get $1.05. Not filling for $1.05. Let's try this again. Let me see if I can get $1 for it. Come on, dude. 95 cents. Really? I typed in 95, man. 95. Ridiculous. All right, 90 cents. I'm insulted. All right, I'll cancel that for right now. I'm going to try to finesse that roll and try to get something for it. I don't know if I'll have to look at the open interest and see if it's liquid enough. There should be plenty there. Volume wise, there's lots of open interest on JD. It's plenty liquid, but I'm just not getting the fill on the roll that I want. Anyway, I'll come back to that. So I've got a hard stop at 11 o'clock. So I'm going to probably wrap things up here in just a couple of minutes. Let me do a quick spot check. Got 3 more minutes. Let's make the best of it. So dollar index is, big spike up and fading. So the dollar's getting hit, which is kind of nice to see. Here's currency strength for the day. Dollar taking a nosedive. What do we have this morning on news, by the way? We had jolts. So job openings came in softer, and that's pretty much it for the day. So that was it. Dollar's getting hit. Totally fine by that, I guess. Oil, a lot of volatility on oil, but still hanging out right around that 72 handle. I probably need a little bit more time on my strangle that I put on CL, which is still sitting right in the middle. Natural gas moving up a little bit, which I'm happy to see. I've got some time on that one. Gold having a great day, as is silver. Silver poked that alarm at 32.25. Gold's up to some fresh highs with a couple days above that recent high back in October. Just keep enjoying your run on gold. I don't know what else to say. It's looking good. I like, kind of going with the melt up in gold. I'm not buying a bunch, but I'm up, 10 grand in gold. I'm fine with that. And silver, I am up 7 grand, sitting on about $12,000 year to date, which is obviously a month into trading. But yeah, let's see. So gold and silver, still liking both of them a lot from the technical side. At this point for silver, this is now resistance. So we'll see if we get a pullback and a bounce. Okay, I still like the dynamic support, but silver might be hitting a 3K target. So keep an eye on it. But yeah, silver's looking good. Bitcoin, expect some volatility, and you're getting it. So we have highs, we have lows. I think more, indecision is ahead. I think this is also fine to look at this as an accumulation zone. Eventually, if we get some risk appetite and this can make a fresh break, I think Bitcoin does have the potential to go to 125, 130 this year, maybe 150 on a bigger bull push. But on the flip side, if we pull back to like 80K, still strong support. So 90K, 80K, I like support on both of those. Okay. All right. I have to go. All right. 1 minute. I'm going to bounce. Chandler, Nick, team, thanks. And I'll be back at this mañana. I'm going to look at that JD roll. I posted Intel. Pulver alerts posted yesterday. Have a look. We'll come back and do it again tomorrow. All right. Thanks, everybody. See you soon. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.